Hello, good week to all. This is Kelvin here again. Welcome to this week edition of the latest weekly technical outlook on the major stock indices for the week of 15th of November to 19th of November 2021. So I'll be covering the latest key trend barriers and the key technical levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and as well as the German 40 index. So before we start, let's take a look at the disclaimer slides first. All right, here we go. So before we jump into the technical chart of the various major stock indices that I usually highlight, let's take a look at the raw momentum data for the week, this last week, 8th of November to 12th of November versus the prior weeks. So across the globe, we could see that last week the major US stock indices started to shape this weekly decline after close to about 4 to 5 weeks of consecutive gain. Okay, so it's pretty normal to see a bit of breather on these major US stock indices. So across the board, the SPX fell negative 0.1%. So the weakest was actually the Russell 2000. That's pretty normal after a strong gain of, okay, you actually lose close to 1% last week after a very strong gain of 6% that was seen in the prior week. All right, that if we take the difference of last week performance versus the prior 4 week average, all of them also start to show signs of, we call it consolidation. All right, so negative 2%, negative 3.28% for the Russell 2000, the Nasdaq 100 negative 3.5%. So a lot of us has been pretty much concerned right now, especially where do we go right now? Okay, because those who actually followed my tweet, I did mention highlight that the SPX 500 still held above last week key medium term pivotal support. So what we could see over here is that the medium term uptrend still remains intact for now. Okay, later I'll highlight the chart for you all to take a look. So what's surprising over here is the Hang Seng Index and the Hang Seng Tech Index. They're actually the top performer of among the majors among the globe, okay, among the major stock indices across the globe. Hang Seng Index positive 1.84% last week. Hang Seng Tech Index a very strong performance of 4.6%. As you know that last week the the start of this China big tech stock earnings season kickstarted last week with Tencent. So yes, even though Tencent's earnings kind of weakened, but markets are always one step ahead. I did mention in my tweet over here is one of the possible reason over here is that the ongoing regulatory clampdown may more or less coming close to an end. Where there's some positive news flows that was actually reported last week. Number one, presidency has really cemented his third term, and also there's this one of these China platform technology platform, which is the controversial TT Global that was actually listed in US exchange. Its IPO was listed on US exchange not long ago, about 4 months ago. And there was news flow that stated that the ongoing investigation into TT.com is wrapping to an end, and potentially before this year end, their app itself that was actually kind of removed in China internet platform space could actually be reinstated before this year end. So it seems to me that there's some signs of rosiness that is being shown in this China technology talks space. All right, so those who are actually alpha clients, I'll be sharing more key technical charts on that is reporting earnings season this week, like that is Paidu.com and JD, Paidu and JD.com. All right, so the Nikkei 225 and the German DAX is pretty muted last week, so almost unchanged for both of the indices, negative 0.1% for Nikkei 225, the German DAX at positive 0.25%. Right. So now let's go into the sectors. So the S&P sectors, if you break down to the 11 sectors for the week of 8th of November to 12th November, what we could see over here is, yes, it's a sign of consolidation. But one thing positive is not all are in red. Okay, you have one, two, three, four, five of them showing positive return. With the leading one, that is the outperforming one, is materials 2.5%, healthcare 0.61%, followed by industrials 0.4%. The one that is kind of a weak will be the consumer discretionary negative 3%, energy at negative 1.7%, followed by utilities at negative 1% as well. So energy, one of the reason is actually showing a bit of weakness is due to the ongoing consolidation that is currently seen on the WTI crude oil prices, where potentially the US administration, that means the White House, may start to actually release their strategic reserve of oil or stockpile of oil uh, to actually elevate this ongoing gas prices that is being seen in the US retail space. So that could actually add a bit of weakness on the energy stocks inherent from this WTI crude oil that is now showing signs of consolidation. So my keyword is consolidation. It's not showing sign of a major reversal. All right, so now let's jump into the technical chart of the SPX 500, the Nasdaq 100, the Hong Kong 50, as well as the German 30 and the Nikkei 225. So let's start off the SPX 500 first. Okay, so as once you could see that this SPX 500 is the daily chart. So over at the daily chart, right, what we could see over here is this is the major uptrend that is taking shape since in place since the 23rd of March 2020 low. So that's the pandemic low. So what we could see over here is right now we are doing that wave 5, bracket wave 5 of a bigger wave 4. The wave 4 is a circular multi-year uptrend. Wave 5, there's this bracket 5 of a Roman 5. Okay, so what we could see over here is yes, there's a bit of pullback over here from last week. So no signs of what I call a bearish reversal move yet. I mean, there's no double top or triple top or anything like that. So in fact, what we could see over here is a potential turn that has taken shape after last week pullback. And what happened over here is that this RSI is actually managed to rest close to a pullback resistance, now turned into a support at the 65% level. Also, no signs of bearish divergence on the RSI yet, despite just being exited from this overbought zone. So all in all, what we could see over here is it's more like a pullback story that is taking shape last week, rather than making of a major reversal that could start to see a 20% retracement of this major uptrend phase that is in place since 23rd of March 2020 low. All right. So the 50-week moving average is now coming, is sloping up, slowly sloping outwards, and sooner or later it will actually come to act as a support at the 45, 40 level, which was actually correspond to the previous all-time swing high. Okay, so now what we have on the strategy chart. So on the strategy chart last week, right, we did mention 46.25 as my key medium-term pivotal support on the SPX 500. So what's 47.25? Just a recap over here again is actually the 23.6% retracement from the start of this 2 slash the minor wave 2 all the way to the current all-time high. Okay, 23.6% retracement. And also right now, also the median line of this short-term ascending channel that I draw from the low of 1st of October 2021 low. Okay, so what we have over here is that intermediate support at this previous minor swing high now turns into a pullback support at 46.67. Still keeping the 46.25 as the key medium-term pivotal support over here. For our RSI is now actually shaping a series of higher low and higher high, okay, which is positive. Okay, that means it's telling us that short-term upside momentum has starts to come back into this SPX 500, and it still has room to actually go up before hitting the extreme or retest the extreme overbought level again at close to the 77.6% level. So no change, still using 46.25 as my key medium-term pivotal support that we have for that we set for this week. Still looking for a push up to retest this all-time high to shape another all-time high level at 47.45/70. So right now what we want to do over here is after this potential move over here at this 47.45/70, this where we could start to see a potential multi-week corrective decline, okay, to shape that wave four. All right, so until then we will still be maintaining our bullish bias for this week. All right, so now let's go on to the Nasdaq 100. Okay, so Nasdaq 100, this is the daily chart of Nasdaq 100. So pretty much similar like the SPX 500 over here. Yes, we shape a pullback, but pullback after that pullback, it doesn't seems to be that shaping this kind of double top or triple top kind of formation. Everything seems still okay. That means, i.e., we're still saying that this major uptrend phase that is in place since 23rd of March 2020 low is still intact. So now the story over here is two things. can we continue this up move since we start from the low of 4th of October, or will it start to shape a corrective decline? Corrective decline, that means to actually touch towards the lower boundary of this ascending channel, which is about 15,000 level, and also the 200-day moving average, or will it going to shape another impulsive up move up? All right, because right now there's two things we got to decide. It's either continuation of impulsive up move, multi-week impulsive up move, or the start of a multi-week corrective decline. Okay, the key word is multi-week. So I'm not stressing that, yes, even though a decline might start, I still do not see it as a potential start of a major corrective move that will actually kickstart that 20% decline to actually retrace this entire major uptrend phase that is in place since 23rd of March 2020 low. Okay, so now on the daily chart, that means there's no exhaustion. What's positive over here in the daily RSI also managed to bounce off from this ascending trendline support that I draw from the low of 4th of October. That's correspond to the wave 4 low. Okay, last week managed to bounce off from here. So like I say over here is that there's no bearish divergence that's being formed on the overbought zone. RSI has already exited from the overbought zone. So what we could see over here is that means, i.e., the previous decline or previous pullback that was seen last week has more or less worked out its overbought element, okay, which is potentially ripe for another round of up move. Okay, so now let's look at the 4-hour chart, the strategy chart that we have. So 4-hour strategy chart, what we could see over here is number one, the RSI, the price action managed to bounce off the median line of this short-term ascending channel that I draw from the low of 4th of October from here. And if I were to draw a Fibo retracement, all right, taking from the low of 4th of October all the way up to the current all-time high that was in 5th of November at 16,458. What we could see is that last week pullback actually stopped close to the 23.6% as well. Okay, so what we have over here for this week is that I will use last week low, which is 15,900 as the key medium-term pivotal support, 16,100 as the intermediate support level. That means this is the previous swing high. Okay, now turns to minor swing high, turns to the pullback support. Still looking for the push up to complete this impulsive wave three, the minor wave three slash, which is confluencing with a cluster of Fibo expansion level at 16,630 slash 16,845. Okay, so until it hit this level, the risk of a multi-week, I don't stress about multi-week, not multi-month, multi-week corrective wave 4 will start to potentially unfold. Okay, so until then, we could potentially see we could potentially switch to a bearish bias because it's a multi-week. You see, it's a multi-week corrective wave 4 that we have a longer time frame for it to potentially decline. All right, but in any case, I like to stress over here is that yes, even though we start to see a potential corrective decline, it's still going to be a multi-week preference rather than a multi-month preference for now. Okay, so do watch out for this level 16,630 slash 16,845. Okay, provided that 15,900 key medium term pivotal support holds. So if we start to see a 4-hour close below this level, potentially we could actually set up down towards this 15,700 slash 15,520. So at this level is actually the lower boundary of this short term ascending channel, as well as the previous all time swing high area at 15,700. Okay, so that is the alternate scenario that we have if 15,900 cannot hold. That means if there's a 4-hour close below 15,900. Okay, now let's move on to Hang Seng or the Hong Kong 50. So no change on the Hong Kong 50. Still recall that last week, right, we have this 24,550 as a key medium-term pivotal support to maintain our bullish bias. And this bullish bias is an up move within this long-term expanding wedge configuration that is in place or still in shape, that's still evolving since the 52-week high of 18th of Feb 2021. Okay, so what's this level? Why is this level so important? Because number one, graphically, it's the previous congestion resistant minor previous congestion resistance zone of 23rd of September to 30th of September, and as well as the golden ratio, which is the 61.8% retracement of the low of 4th of October to the recent swing high of 26th of October. Okay, so still no change. And what's interesting is that last week, despite shaping down a lower low in price action to test that 25,550, the 4-hour RSI start to shape a bullish divergence. Okay, spotted after hitting its extreme oversold zone over here. So what it means that this down this push down that was in last week and a test of that 25,550 before reversing up indicate to us that the downside momentum has more or less been eased off in terms of short term, and we potentially could actually support further higher price action to actually test 25,820. A break above should take up to this medium term range resistance zone that I drawn over here at 26,440/26,750. So definitely, if we start to have a 4-hour close below 25,550, all bets are off for the bullish buyers. That's where we could see another round of slide to retest the long-term pivotal support at 24,000/23,500. So this is important. This is a very long-term key support. Like I highlight here, why is it so key? Go to the weekly chart. This is where the long-term ascending trend line that managed to cap previous severe or steep decline since the great financial crisis low of October 2008. All right. Now, moving on quickly to the Nikkei 225 or the Japan 225. Okay. Okay, on the daily chart of Japan 225, moving nicely, higher high, higher low, since the retest of 4th of October. This is the kind of expanding wedge bullish breakout. Retest, retest it on 5th of October and start to shape higher high and higher low. RSI pretty much healthy in terms of upside momentum. Last week managed to shape another higher low right at the 50% neutrality level. Okay, so RSI is actually slowly inching upwards, haven't yet reached the overbought region yet, indicating to us that it's actually supporting further potential price action. Okay, so definitely the key medium term resistance to watch will be this swing high, okay, of 16th of February to 14th of September, which is at 30,700, 30,716. Okay, which is also the close to about 14-year high for the Nikkei 225 as well, or the Japan 225. So definitely for a multi-week strategy, we'll be using this as a potential a level to actually watch. That means if prices were to push up, this is the level we are expecting to actually hit in first step first. Before we're talking about going up higher to the next resistance at 32,500 slash 30,850. So what we could see is that the 100-day moving average, okay, this is the 100-day moving average, has managed to actually cap previous pullback of 21st of October, and this was last week pullback, earlier last week pullback, coming very close to it at 29,060 level. So last week, right, we have a resistance, a key medium pivot support at 29,070. So I slash 60 for this week, taking into account of last week close, the lowest of last week close at 20. So as long as this 29,070 slash 29,060 holds, we're still expecting a further push up towards this 30,330 level, then thereafter followed by the that medium term range resistance that highlighted on the daily chart at 13,716 slash 30,870 level, which is a one-time Fibo expansion level that I draw from the low of 6th of October, project it to the high of 20th of October, and from the low of 25th of October. So definitely, if a 4-hour close below 29,060 level, we will start to see another messy kind of corrective slide right down towards this minor range support that's in place since 21st of October to 29 October. Now it's coming to support at 28,400. RSI on the shorter term is also pretty healthy. Okay, so managed to help above this significant ascending corresponding ascending trend line support level, inching much higher, hasn't reached into the overbought zone yet. Right, so still maintaining that bullish bias on the Nikkei 225 or the Japan 225. Okay, so last but not least will be the German 40 index. So you could see the German 40 index now is inching higher. Okay, 16,090 level managed to clear above last week the first resistance, this resistance at 16,070. So the next level will be at 16,685, which is a cluster of Fibo expansion level. So now the 100-day moving average, right, is actually acting as support at 15,785. Okay, so RSI is, yes, it's already coming to overbought, but hasn't hit the extreme overbought level yet. Okay, so usually the extreme overbought level, if I were to draw since the 3rd of May 2019, okay, is at this level here on the average. So it's pretty close. It's about 76%. Okay, so hasn't really touched this level yet. So what we could see over here is that we could see a bit of movement upwards, inching upwards. Okay, so what we are actually expecting over here is no change for what we have last week. So last week, continue to inch higher. Uh, we have a medium-term pivotal support last week at 15,785. So what we have is that we have a target of resistance at 16,300. And for this week, I add another resistance level, which is a Fibo expansion level as well. Okay, a cluster of Fibo expansion level, and as well as the top of this ascending channel resistance that I draw from the low of 6th of October. Okay, at 16,420 slash 16,460. So what we have is still maintaining that bullish bias as long as 15,785 holds, which is so the 100-day moving average that I show on the daily chart. So if we start to see a 4-hour close below this level, it could take us down much lower. That means we may start to see a corrective, a pullback, a multi-week corrective pullback towards this 15,400 level. So all in all, what I want to highlight is we're still maintaining that bullish bias for the major indices for this week. Especially do keep a close watch out on the SPX 500 and the Nasdaq 100. Because if we base on the Elliott wave count or the fractal analysis approach, we are now coming very close to the tail end of its multi-week impulsive up move sequence, which is the wave 3, where it could be ripe for a potential corrective wave 4 decline that could actually take shape towards the later part of this week or early next week. Okay, so with that, have a great trading week ahead, and I see you all next in my next video.